Hi everyone, delonewolf here. Welcome back to EVE Talk, your weekly look at the market in EVE Online. Now, my week in EVE has not been very eventful. I've actually played quite a bit of Path of Exile, but it looks like there's a pretty unusual situation. Three of what I would consider to be like main goods in the economy in EVE Online in the ticker have not moved. So no movement on the Tengu, no movement on Tritanium, and no movement on fuel blocks, which have been really stable in the last few months. So let's just jump right in and see what's happening in the market, because a lot of it is decently unusual. As always, we will start with plex. I'll write down 45 seconds for that. And let's take a look here. Plex are going down in price. So we can clearly see that we're reaching like 1.15 billion here on the 5-day moving average chart. You even have a data point close to 1.10 billion. That is pretty unusual. But someone just brought in 28 plex at 1144, whereas, well, 1152 I think is where the current price actually is. I think these 28 plex will be picked up pretty soon because they are quite a bit lower than the rest. And this is of course the effect of Frostline with the sale that's going on and with plex actually dropping from sites. Not sure how many that is. We don't have numbers. It will have a little effect on the market, but I don't expect it to be that huge. So I think most of this is actually down to the plex sale. And yeah, you're closer to 1.1 billion right now for a plex, which is good news compared to like the 1.2, 1.25 that we've had before. How long will it be able to sustain this decrease in price? That's something that's very hard to say. I think as soon as the plex sale ends, this will also be over and plex will actually bounce back a little bit. But it could be that that it has some legs, some momentum, and that it could actually maintain a lower price for a while. We'll have to wait and see on that. It's pretty hard to tell. But yeah, my expectation is as long as the sale goes on, there will be some pressure. But once that one is over, I think we'll bounce right back. Next up, we've got multiple pilot training certificates. Those are going for 1153, which is pretty close to what plex were going on the sellers. And here you can actually see that the multiple pilot training certificate did a pretty sharp drop below 1.1 billion, but then already bounced back a little bit. And now, yeah, the sellers are going for pretty much the same as plex. So this is, of course, very strongly correlated. The item does pretty much the same thing, except the multiple pilot trading certificate can only start trading on a second character on an account. So it's a little less handy than a plex. But yeah, these, of course, will always move in tandem. Here we've got the pilot's body resculpt finally. Is also going down slightly, so the pressure from what's happening with the plex sale is of course going to transition to anything else that then gets picked up on like the Aurum store or that is bought in a similar fashion that cannot just be produced in the game like ore or any of the standard modules, but this is something that you have to pay real money for, and so the pressure on plex is also showing in the body resculpt certificate. But if you look at the volumes here, volumes are up a little bit. People are taking advantage of this, maybe to buy and invest, maybe to actually resculpt their avatars. That's possible as well. But down price, slightly up volume, but we're still talking an average of maybe 10 of these body resculpt every day, which is not that much. Compared to plex, we're talking around 2000 plex that are being traded every day. You can clearly see the difference there. So moving on to some minerals, 4 minutes. Let's take a look at that. So interestingly enough, Tritanium pretty much flat. In fact, it's not outside of the realm of my expectations from last week. I think the Isaac minerals are finding their price range. What does surprise me is that we've just completely lost any volatility here. We're right at the 6.3 ISK mark, and that's where Tritanium seems to want to be. So you've got one small order of 6.3, 204 units. That's pretty much negligible. Then you've got 633, 634. So here you can clearly see that some titanium is coming in. On the buyer side though, you've got 2 billion being bought here for 624, another 54 million at 625, and so that is closing the gap as well. And right around 630 I think is where everyone says, okay, titanium is at a good price here. Supply demand, yeah, slight edge to demand, maybe 2 billion units here is pretty big. You've got orders of 250, 200 and 300 million compared to like the 50, 40 million that you're seeing on the sellers. So if it would swing, it could go up a little bit, but it really does look like at least titanium here has found a price point for now. Let's see if the same thing is happening for pyrite. Well, it's probably trying at 11.3. If we take this high point and then take all of the high points after that, maybe slight decrease in volatility, and then here from the low point it's also decreasing, 11.1 then 11.2, bouncing off of that. So yeah, the price range 11.2 to 11.5 does seem to be what pyrite is trying to do. Sellers are 11.25, 11.2, buyers 11.13. Again, very small margins. And despite that, we're still seeing 40 million units coming in here, another 32 here on the buyers, 200 million, 126 million, 100 million. So again, slight edge to demand, which is going to keep the price from really crashing down, but decent supply, which is also keeping pyrite from like going to the moon all of a sudden once again. A price range, I think, is indeed what a sideways movement, I think, is what we have to account for when it comes to the Isaac minerals. Mexalon next, yeah, very similar. The chart does something completely different from the other two. It has basically been going down since its high of 70 ISK. Mexalon, that is, slight hesitation here at 65, but yeah, just heading slowly towards 60 ISK as an average. 60.3, 60.5 for the sellers, 58 ISK for the buyers. And again, in the volumes here, 20 million, 10 million here, 11 million, 13 million. So pretty much in line, honestly, for Mexalon, which is probably why we're seeing the price constantly decrease slowly rather than showing some hesitation, which we saw in titanium and in pyrite. But we're probably gonna land around 60 ISK, and then we might just see slight volatility once again, but it's probably going to be very limited in range, just like the other Isaac ones. Next up here, we've got Isogen. That was actually showing some signs of declining, breaking 115, but the price range, I would not be surprised to have to call that between 110 and 120. Honestly, if we start to move in between here, should be okay. If that is to happen, then we should start to see the first sign of this bouncing back. So more demand than supply. Let's see if that's actually happening here. Recent orders, maybe the first two-thirds of the page here, 2 million, 3 million, going for 109 ISK, so trying to go below 110. Yeah, they're trying to get it done. Here we got 20 million, 40 million, 24 million. Yeah, actually going as low as 112. 112.5 here, so there is still some pressure from supply as well. I think price range could dip below 110 if the buyers actually manage to keep holding off in volumes for Isogen. At some point I do think they're gonna move in, but it is not impossible, I think, for Isogen that will actually move between 105 and 115, considering the oversupply that is still being shown right here. So slight pressure on Isogen, not very good news, of course. Tried to go as high as 130, but had to give away all of that ground already. And with the bottom just below 100, a price of 105 to 115, I think is not a good retracing if we go for 1 year's. 1 year chart, yeah, we used to be like at 125, 130 before the actual mineral rebalance. So Isogen, not that hot to be honest. Next up we've got Noxium. That's really not good news, because we're again going down quite drastically, reaching 470, data points below that, bottom at 460, close to that. So, and the buyers are trying, 462 here. You've got 1 million and 1 million being bought. It's not that much, and despite that, you still see 3.5 million and 4 million units coming in here at 480, 479. Yeah, the pressure is still on for Noxium. It's just being oversupplied, and I think that is from nullsec. So Noxium can be mined in highsec as well, but I think it's mostly coming from nullsec at the moment, which is causing the price to decline, despite the fact that we are at a 6-month low at this point already. So let's see if that's happening for the other nullsec ones as well. And here you can see on the Zydrine chart that we are as well on a 6-month low. A little bit of hesitation here at the tail end, but it is very hard for Zydrine to actually make any momentum. We're basically playing with the 900 price mark at this point. The buyer's 901, so they're just not going to dip below that for now. Still 3 million units being bought at 900 or better. On the seller side though, 951, you still have almost 10 million units. 960, you've got 40 million units. So this does show that the nullsec minerals are in serious oversupply, that pressure is still on, and if these buy orders actually disappear and we go below 900, Zydrine could actually retrace even lower, which would be quite surprising, because this is definitely not bad. Zydrine below 1000, considering it went as high as 1600, but it is happening, and honestly I don't think it's outside of the realm of possibilities. So keep a close eye on these buy orders. If they actually break 900 and supply keeps coming in, then Zydrine is actually at risk of going below 900, I think. Here we've got Megasite, which is doing exactly that. You can see here, I think we had a little bit of support at 1300. That was broken. We went to 1100, did a little bit of a bounce back, but we actually are breaking that at the tail end. So Megasite going below 1100, sellers are forced to follow, and you still have a million here, almost a million here, a million here. So the supply is still there. The demand, are we starting to see 5-6 million of them being bought? Nope. People are still saying, well, I'm gonna buy just around 1000 ISK. I'm only going to buy small volumes, and the pressure is on now, even for Megasite. I would say 1000 ISK is still at risk. So when will these find their bottom? I don't think we'll have to wait that long anymore, but I think 1000 ISK could still fall for Megasite, and 900 could actually fall for Zydrine. Dangerous situation for these minerals, but the nullsec oversupply situation just seems to be a fact. I'll touch on Morphite. What's that one doing? Dropped off a little bit. We had highs at as high as 13,000, but it's still managing to maintain 11,000 ISK here as a pretty strong price point. So I think that that's actually okay. We'll maybe take the 1-year chart here. You can see the mineral rebalance caused a big increase in price, I think, for Morphite, but here it's managed to maintain a price 12,000, 11,000 ISK in general. Pretty strong performance actually for Morphite if you compare that to like Megasite and to Zydrine, which have had to retrace quite a bit more and are still under significant pressure. So yeah, that's it for the mineral market. Pretty interesting situation. Let's see if there's some of this that's starting to show in the Tech 1 market as well. 13 minutes for some Tech 1 chips. We'll go for the 6-month chart here, trying to see some details. Armageddon still trying to hold on to 210 million ISK, not bad. I do think the Armageddon is an absolutely amazing battleship, so I'm not completely surprised by that. But despite the highsec minerals stabilizing, nullsec minerals coming at a 6-month low, the Armageddon is still at a 6-month high. So pretty high price for these. I think you'll find decent margins on perfectly researched blueprint copies for the Armageddon, and the supply just isn't there. I mean, someone did manage to bring 48 of them less than 24 hours ago, but it's not that many people that are bringing in Armageddons trying to cash in on these high prices, which surprises me a little bit. Next up here we've got the Caracal. That's a bit better. After trying to hover around 12 million, 11.5 to 12 million for a while, we're now heading closer to 11 million for the Caracal. So decent supply on this one. Look at that, 210 of them coming in. That's gonna take a little bit of time for all of this supply to dry up, and thus the Caracal is stabilizing at around 11 million and actually on a downtrend in line with some of the mineral pressure that I'm seeing. Next up here we've got the Dominics. Okay, tried a high point of 210. Now it's slowly going down. We're looking at 195 for a Dominics, and it's hovering around that. Still decent supply, although not a lot of fresh supply coming in. But of course, why would you bring a Dominics at less than 200 million when you could bring Armageddons at 210? That does make sense. But it is slowly starting to look like the Tech 1 industrial potential in EVE Online is lacking a little bit to actually fill all the gaps at the same time. So people are having to choose, trying to choose the best production, and this is why we're seeing a slight bounce back here for the Dominics, because people see that, well, I can sell these below 200 million, but I can sell Armageddons at 210. Well, I'd rather make 50 Armageddons and bring those to the market, thus causing the Dominics to bounce back a little bit. Next up here we've got the Drake, also bouncing back from 54 million towards 56. I mean, it's not a huge increase in price, but again here we do see that the orders are starting to be a bit older, nothing less than 24 hours ago. So people are definitely, I think, starting to choose what to produce, what to bring to the market, trying to find the better margins. And it's not the Drake, considering of course that it had done a significant pullback, well, significant, from 57 to 54 million, now bouncing back a little bit on the lack of supply. Here we've got the Mauler, which is a cruiser, also bouncing back off of 11 million, so 11 to 12 million, it's an okay price range. But people are starting to bring those back because they could try to sell them above 12 million. It's not that many though, 82211, you know, that's probably less than what is being traded on a daily average. So the Mauler also showing a little bit of that volatility when people have to pick and choose where to actually produce their Tech 1 chips. Next up here we've got the Myrmidon, also bouncing back after going down from, I would say, 58 to 55 million, bouncing back up above 58 million, and the response here has been shown though. People saw that Myrmidons were going for almost 60 million, and so you get an entire front page of new supply trying to cash in on that higher Myrmidon price, which is of course diverting production from other ships at the moment. I really think that that's what's happening. So Myrmidon, healthy supply, that's going to stop the increase in price here, might even pull back a little bit, and then we'll move to another market, I think. Oracle next here, also slight bounce back, but also already stopping, so we should see okay, 67 of them coming in, 20 of them coming in here less than a day old. That obviously put a stop on the increase in price for the oracles. Gonna give this one a little bit of a breather, but again, these oracles had to be produced, which probably meant no Dominixes, which were at the low point, are being produced at the moment. It's pretty interesting to see this dynamic actually. It's something that like 6 months ago, if you would have told me what's happening in Tech 1 market, I would say, well, everyone is producing pretty much everything and we're so well stocked that we actually have stable prices where people actually just wait for an alliance to buy out a single ship and then plug that gap, trying to take advantage, but keeping the general market well stocked. That seems to be slightly out of balance at the moment with a lack of supply. The Raven though managing to stay below 190, so that should be half decent, and indeed we have a few Ravens coming in, like maybe here we've got 10 of them here, and this would be maybe another 10 of them, and then 20 like a day ago or something like that. But it used to be that pretty much all the ships were in this situation where you'd have daily supplies of all of them. That seems to definitely have changed. So the Raven here moving flat below 190. How long is that going to last? Maybe if there's not enough demand for Ravens, because I think there's different metas that are in vogue at the moment, then it could maintain this dynamic for a little bit, but at some point there's going to be pressure to not produce Ravens and to make ships that are worth more for the minerals. Next up here we get the Stabber. That one's actually going down a little bit, and I think it could try to find a momentum at like 10.5 or 11 million, considering the rest of the chart here. So let's see what supply is looking like. Well, still 55 of them coming in, so yeah, the fact that the Stabber is still selling for 11.5 million almost. It's still a good price for a stabber, considering that we used to only pay 10.5 million for that. And so there people are still bringing those to the market, although not in really that great numbers. There are at least some of them to pick up if the price would go up. You know, they would have some supply to chew through, which is going to stabilize the stabber a little bit. But again, not huge supply that's going to cause the stabber to all of a sudden reach that 10.5 million. I don't think it's in the cards. Next up here, we've got the Tornado stabilizing at 74 million. So are we seeing decent supply? Yes, we are. Pretty much half a page, 32 of them coming in at 75 million. But I think that's going to stop now, because at some point, you know, oracles are probably going to make more sense, or as I said, other ships like the Armageddon, which is really, there's not that many of them. Daily volumes 20 to 30 of them, and it's just 50 of them that have been brought here, and they're going for 210. So I think Tornado, it's actually unusual to see this one being stable with half a front page of new orders despite it being at a low point. So I think this could end at some point. If you want to pick up a few cheap Tornadoes, it could be the time to do so. Next up here we got the Typhoon. That one is under pressure a little bit, just like the Raven. I think managing to maintain a price range of 182 to 184 is due to its lower popularity, and supply wise, yeah, again, half a page of new Typhoon still coming in. Demand wise, yeah, people are trying to pick them up at 172, but it's mostly the supply thing that's stabilizing the Typhoon, but it can also only do so because there's not that much demand for them. And next up here we've got the Vexor, which is trying to find a price range of 11.5 to 12 million, coming off of a high, so we should see some fresh supply coming in. 50 of them coming in right here. We've got another 200 here, 60 of them here. Yeah, that's also less than a day old. So yeah, it's these new orders that have tried to take advantage of Vexors at almost 12 million that have pushed the price back down. And of course, the smaller the ship, the easier it is to jump on an opportunity of a higher price. And so that volatility is always going to be a little bit less in volume and shorter in time frame compared to the bigger ships. I do think it's just not that easy to produce hundreds of Armageddons to try and take advantage of this. There's apparently just not that much Tech 1 production out there at the moment to plug all of these gaps, which actually provides opportunities for people that want to go into industry. Next up, we'll check on some Tech 2 ships, 2215, and let's see if we can spot some trade opportunities. And the Basilisk here going up a little bit from 180 towards 190, but that's just not enough. That's like 5%. So yeah, Basilisk, as I've said, if you look at the minima on the chart, the low points and the high points, it's just basically stabilizing around the current price point around 185. So unless the bottom drops out all of a sudden and you start to see Basilisks being bought, well, 176 is okay, but if it ever goes below 175, then I would say okay, maybe you can you're definitely doing a good job trying to pick those up, but the decrease in volatility here is not really something that inspires me confidence to invest in Basilisk at the moment. Cerberus next here did go to a very low point for the last 6 months, and it's crawling out of that right now. 5-day moving average breaking the 20-day moving average, so I would say you could have probably picked some up close to 170, and you are now already selling them for 184. So that is almost 10%. We'll have to see if this increase in price has some momentum. If for some reason Cerberus might just chew it up, then it would be good to see that volatility. But of course, I would say right now the buy opportunity for Cerberus is over, because yeah, we came back from that very low point. Next up here we've got the Guardian. That's pretty decent, right? Starting at 130, goes up to almost 150, goes back down to 130, almost 150. So your sell opportunities is going to be over, or if you're willing to settle for a little bit less profit, you bought them at 130, you can still sell them for 145, still more than 10%. So it's not that bad. And yeah, the Guardian is one that was tradable in the last few weeks at least. Next up here we've got the Hound, again showing that stability with the low points coming up towards 17, the high points going down towards 17, and just there's no sign of any real instability here. I would need to see this chart dive down below 16 million to say, okay, you can actually invest in this. You'll probably get that profit out of Hounds, but only if you can buy them for like close to 15 million or something like that. Next up here we've got the Ishtar. It's trying, but it's such a popular ship that's been nerfed that it's very hard to say that you're gonna actually get those big spikes at the moment, because I don't think that Gnostic Alliances are making that many Ishtar fleets at the moment. I think there's other ships to look at, and so yeah, I mean, it's still okay. 175, above 175, and then a low of 155. That's like 20 million. That's definitely more than 10%. But right now we are in between that. So I would say if you can pick them up close to 155, you're doing a good deal. And there is decent volatility here. Why not if the Ishtar actually starts going down a little bit more? But again, it is hit by the nerf bat. It's not exactly out of the crosshairs, I don't think, for CCP just yet, so be careful with this one. Next up here, the Manticore, again not showing the instability, the volatility that I would like to see for trading in the Tech 2 market. It's strange, you know, it used to be when I first started, I think, checking Tech 2 market for trade opportunities, it was all about logistics cruisers. You had great opportunities there. Then those completely died down, and I went to stealth bombers, and I saw a lot of volatility in that market. You could really make some trade money. That has completely died down again, and we seem to be back to the logistics cruisers now, where at least there are some opportunities. So yeah, the Manticore settling but staying well above 20 million, again slightly going up here, so I just don't like it. The Nemesis was also at a 6-month low last week. I said, okay, I think if you actually buy some here for the medium to longer term, that could be okay. It actually looks like a lot of people either listened to it or spotted that opportunity as well, because now we're slowly going back up towards 17.5 million, exactly 17.5 for the sellers, 16.2 for the buyers. You could have probably bought them below 16 million last week, and that's okay to have, because you will probably be able to sell them at 18, 20 million at some point in the future, but it is a slight gamble. I wouldn't say that this is a short-term trade in these covered ups stealth bombers. Next up here, the Alneros. As you can see, that's quite a bit better, 140 to 175. That's pretty much 10%, a little bit, yeah. Is it 10%? Would be 14. Yeah, it's definitely more than 10%. So that's not bad. Again, going back down, going back up to 175 again. Now we're going back down. It's unfortunate that we're not going to touch that 140 again. You know, if you can pick them up for 135 to 140, that's definitely a good buy for the Alneros. But the buyers are staying a little bit above that for now. So the volatility is dying down, but if we ever go back down here, then yeah, the Alneros has shown that it has good potential and was something that you could have traded after the summer here. Next up, we've got the Purifier. Again, don't really like it. What I do like here at the tail end, it is again going down, breaking 17 million on the chart. That is probably starting to be pretty interesting to try and pick some up on the buy orders. You can see nobody's really buying a lot of them. 16.5 million for a Purifier. I think that's okay for a medium term investment, but again, be a little bit careful with that. Don't just throw all your money in this, because you could be waiting a while until you actually make some money on that trade. Next up here, we've got the Scimitar. That's actually pretty interesting as well. We went to a very low point of 120. Not sure if I spotted this last week, but it looks like we're working on our way up. Sellers 130, but yeah, buyers 116 million, well below 120. I really think that that's not bad for a Scimitar, so I think it could be okay to try and pick a few of them up, and I'm not the only one who's thinking that. Just look at the fresh orders here. When we were below 116, that was just a really good opportunity. So you're probably a little late, to actually buy scimitars below 116, but that could still be a pretty decent price for a scimitar considering the price range of the rest of the chart here. And then finally the Vengeance also dipping below 19 million, so coming towards the low, but again it has been way too stable. I would be even more careful with the Vengeance than the stealth bombers that I've shown. Just don't really like the assault frigates at the moment. Moving on then to some Tech 3 ships at 2940. And let's take a look at some of these here. We've got the Confessor, which is showing some stability finally at a decent price range, 55 to 60 million. And you've got decent supply here. You even have another 30 of them coming in less than a day ago. So this is looking okay to not completely explode either way. And it has some supply, it has good demand, although daily volumes are close to 200, so these 30 are not that much. Demand seems to not be that super high here in numbers, so I think Confessor, okay, slight pressure to go up, but not by that much. Next up here we get the Hecate, also stabilizing just below 55 million supply wise. This is looking alright as well. Again, 40 of them less than a day ago. There is still a decent number of them on the market, so Hecate should be alright for some stability as well. Here we get the Jackdaw trying to do the same below 60 million. That's pretty interesting. Get half a page of new ones, probably close to 60-70 new Jackdaws coming in. That's going to keep prices decently stable as well, I think. So pretty interesting. Some stability showing up in the destroyers here. We'll check on the Zweppel next. Close to 55 million, also stabilizing. Again, half a page of new ones. That's in fact close to 100 new Zweppels, I think, less than a day ago. So yeah, the tactical destroyers, they may end their instability if supply can actually keep up at the moment. Let's take a look at the cruisers then. The Legion slightly going back down towards 180, so we should have decent supply of this as well. Well, actually be careful with this one. I mean, you've got a few new sellers, but it's only like 15 ships or something like that. So I think this decrease in price is going to end anytime now. Where will it go from here? Honestly, with all the volatility we've seen in the cruisers, it will remain a bit of a gamble. What are you buying them for? 176, which is around here on the chart, in between where everything on the 6-month chart. So I would not say that this is going either way. There are some new ones coming in as well, although not that many. Okay, again, I would say a slight sign for more stability in the Tech 3 market, but be careful. This could end any moment for the Legion. Next up here we've got the Loki, very similar chart, trying to stabilize towards 180 as well. New orders, 30 of them coming in, just a few orders less than a day old. Decent supply on the rest of the market, so okay, maybe slight sign of stability here as well. Proteus going up though from 180 towards 210. So 210 for the sellers, but you do have a slight response here. You've got another 40 Protei coming in less than a day ago, half a page of new orders. So I think the pressure will be on pretty soon on this increase, and we could start to stabilize from that, because there are definitely more Protei on the market than Loki or Legions. So it's interesting. Here's the Tengu then, pretty much did not move, although managing to maintain a price of like 193 million. Yeah, 193 for the sellers, and despite that 25. So we do see supply coming in here across all of the ships, and that's something we saw last week, but not the week before that, and for a few months when we had all of this instability. So it's looking like maybe Tech 3 production is either picking up, or a cartel is breaking, or something like that. People are finding a way through all of that. The fact that we're seeing all Tech 3 ships coming in less than a day ago, with some numbers at least, to me indicates that we could actually be heading for some more stability in the Tech 3 market, which, well, for some people might be good news. For other people that are probably making money on the jumps here, look at that, 160 to 200 million, that's 40 million on the trade there in not too much time. and you had some other opportunities here as well. If you look at the Proteus, then yeah, people will have been making some trade money on these Tech 3 ships as well. But it looks like production may just be picking up a little bit in the Tech 3 market, and that could show some stability in the near future. We'll have to keep a close eye on this though. So that's pretty damn interesting. As the extra material, I'll do a request, 3430. I'll have a look at some salvage. The request was for salvage from Citadels, but it's actually a pretty long list. There's a pretty long list of salvage that will not be used in rigs for Citadels. So pretty difficult to just go make a filter of that. So what I'll do, I'll just go for salvage materials, and we'll just take a look at these charts and try to see if we spot any trends here. Obviously here, alloy titanium bar, you can clearly see that one go up as the announcements for the materials for the rigs were made. So that one went up from 20k to 32k at the moment, and still climbing. So still has momentum. There's very high demand for these, of course. Trying to make rigs for the Citadels could become quite a lucrative business. Probably also the more affordable blueprints. So why not make these investments? This is yeah, pretty sharp increase in price, almost double the price if you look at the average here of 16 to 18k. Before that, we're closing in on double the price now. So this is obviously one that is being used in the rigs for Citadels. Let's take a look at armor plates. That one starts the 6 months at 98,000, ends at 94,000. So armor plates are not used in the Citadels, and these show just basic, I think, market volatility up and down pretty erratically. And an average of maybe 95,000 over the last 6 months or so. This is from 90,000 to 99,000, a 10% margin on the very low point to the very high point. I think that's okay. This is not like something that you're actually going to manipulate with trades or try to make some trade money on. This is just normal market variation that we're seeing in these. Artificial neural network, yeah, that one jumped up from 2,000 ISK, below 2,000 ISK to 18,000 ISK, but it's now pulling back a little bit towards 14k. Data points at 12k, sellers are 13,000. So there is some pressure apparently on the artificial network at the moment, which might have just gone a little bit too high all of a sudden. But still, it will be a very sharp increase in price due to the Citadel rigs that will be coming in the expansion. Broken drone transceiver, I thought that was maybe used in one of them, sort of strange, but that one is just staying at around 600 ISK here. So I would say from this chart it's probably not used in the Citadel rigs, although the 6 month trend has been up from 300 to 600, which is almost double the price. The averages here though just slowly going up over 6 months from like 400, then 500, and now closing in on 600. So there may just be some pressure on salvage to go up in general, but this one does not show that big jump that we saw in the other ones. Burnt logic circuits going from 40k and now heading towards 65k. So okay, except for armor plates, general uptrend over 6 months. This is an increase of more than 50%, so that's not insignificant. Burnt logic circuits clearly going up in price. Capacitor consoles, a big jump up here early October to 2.5 million, now going back down to 2.10 million, but the trend over 6 months is still from 1.6 to 2.10 million. So not bad, honestly, all of this salvage, not bad at all. Chart microcircuits going from 300 to 340, pretty timid increase, around 10% or so. So I think these are not used in the Citadels and are pretty damn common. But okay, still 6 month trend is up. Conductive polymers started below 500, headed towards 600, dropping down towards 500. Pretty interesting here. But yeah, the sellers 600, so that was just, I think, a slight blip. And again, 6 month trend is up. Conductive thermoplastics, obviously Citadel related here, going up from 10k to 40k, quadrupling in price, now heading towards 50k. 6 month trend clearly up. Contaminated Lawrence fluid, very common one, from 500 to 550, increase of 10%, and actually trading more in a 600 price range, which is again increase in price over 6 months. Contaminated compounds, very similar. I'm actually going to start to go a little bit faster. As you can see, it's a pretty big list, but unless there is something really special, again, current pump, clearly Citadel related, increase in price is visible here as well. Damaged artificial network, 300 to 400. Now we're trading above that. So again, the increase in price in the salvage over the last 6 months seems to be a general trend. And the Citadel ones know this big jump in price right here. So here is an enhanced word console, showing a bit more volatility, but again the uptrend at the tail end here makes for a clear 6-month increase in price. Fried interface circuits, all right, that one is trying from 4,800 to 5,000. I'm not seeing a general increase in trend here, so this is one of the exceptions. But then going back here, impetus console, going from 10k to almost 90k, and actually managing to maintain this price. Intact armor plates again jump up here in October, and 6-month trend is up. Intact shield emitter clearly up as well. Interface circuits, again an exception, from 260k to 260k, probably not used in the Citadels then. Logic circuits clearly up for 6 months. Lawrence fluids clearly up here again. Malfunctioning shield emitter up, but very slowly, from 500 to 700, but you can see the averages going from 500 then to 600 for a while, then up to 700. We're slowly going up in most salvages, and that is obviously the trend here. Again, microcircuits, Citadel related. Nanite compound, one exception, well, there had to be one, right? Dropping at a 6-month low here, pretty interesting. Maybe someone made a wrong gamble and actually decided to cash out on this one or something like that. The power circuit went up quite sharply to 1.5 million, managing to maintain a price of 1.15 million. So at a 6-month low, but I think we could actually go up after this. May not be used in Citadels as well. Power conduits obviously is used. Scorch telemetry again up. Single up, clearly up. Smash trigger unit up as well. Tangled power conduit up. Clearly Citadel related. Again, thruster console, probably not used in Citadels. Starts below 500, goes as low as 300, so 400 to 500 on average. And now we're trading above 500, and now some volatility heading towards 600. So that uptrend is there, except for a very rare exception. Here again, trip power circuits, well, 28k to 29k, so on average here managed to maintain a price, but it's what, maybe 4 of them or something like that on the entire list. So the general trend in salvage clearly up. You can also clearly note the ones that will be used in the Citadel rigs, and those know this sharp increase in price around November, and are trading up as well. But the general trend in salvage has actually been increase in prices, which I think is not bad, because salvaging is a viable activity, and it's a big part of exploration as well in wormhole space, which I think should keep that activity successful despite how easy it is. You know, you can just take a frigate, go out there, look for relic sites, grab some of that really nice Tech 2 salvage, but as you can see here, that has not caused the bottom of that mark to really drop out or anything like that. So it remains a viable activity. The general trend in salvage up. Pretty interesting, very good suggestions. If you have a suggestion for something for me to check, feel free to post that in the comment. I will try and make that happen next week. For now, thank you very much for watching, and I'll see you all next time.